Welcome to this explainer. Okay, so if you've been watching the crypto markets recently, you might honestly think the entire industry is just one giant meme coin casino, right? Just completely driven by hype, speculation, and dog pictures. But behind the scenes, a very real, actual revenue-generating financial juggernaut has quietly been taking over. We are talking about Hyperliquid and its native token, HYPE. Now, this is absolutely not your standard speculative asset. This is a disruptor that is literally rewriting the rules of decentralized finance, and we're going to break down exactly how they're doing it.
Here is our roadmap for today. We'll start with the quiet crypto juggernaut, explore the origins of a disruptor, and break down the billion-dollar flywheel. Then, we'll weigh the 2026 bull case against the bear case risks before landing on our final verdict. I promise you a comprehensive, 360-degree, completely objective breakdown of this asset.
All right, part one, the quiet crypto juggernaut. We're looking beyond the meme coin hype. So while the broader market spent the last couple of years, arguing over ancient layer one rivalries and chasing the next shiny object, the developers behind Hyperliquid just kept their heads down and built. And man, did that focus pay off. $2.9 trillion. Let that sink in. Trillion with a T. That is their perpetual trading volume for the year 2025 alone. We're talking about traders making highly leveraged bets on future price movements at a truly massive scale. They didn't just build a neat piece of tech here, they captured a monumental global share of trading volume.
And they achieved this crazy volume by basically cracking the code on fundamentals. For years, crypto traders were forced to choose. You either got the lightning-fast feel of centralized giants like Binance or OKX, or you got the transparency of decentralized finance, where you actually hold your own funds. While Hyperliquid came along and said, why not both? They offered one-click trading combined with total self-custody. This absolute game-changer of an innovation pushed them to become the third or fourth largest global perps exchange by open interest. And all that massive volume, it generated roughly $800 million in real trading fees in 2025.
Moving on to part two, origins of a disruptor. Let's talk about this revolutionary launch.
You definitely don't process $3 trillion by just copy-pasting some existing code. Hyperliquid operates as a bespoke Layer 1 blockchain. That means they built their own foundational network completely from scratch, specifically designed to handle the intense computational load of order book trading. But, their launch back in November 2024 was honestly just as unique as their tech. 0% went to venture capital. Literally zero. They completely rejected traditional VC funding. Instead, they took 30% of their entire 1 billion token supply and airdropped it directly to nearly 100,000 early users. Some of those top recipients netted six-figure payouts just for using the platform early on. Talk about building a fiercely loyal community from day one, right? And since that launch at roughly $7.56, the trajectory has just been a wild ride. It surged to almost $60 by late 2025. Then, early 2026 brought a broader macroeconomic dip, dragging it back down into the 20s. But, and this is key, because the underlying exchange was still growing like crazy, it rebounded ferociously. By May 25, 2026, it hit a brand new all-time high of $64.70. That is a jaw-dropping 900% surge from launch. In fact, that recent May breakout was so aggressive, it liquidated short sellers for over $100 million.
All right, part three, the billion-dollar flywheel. This is the buyback machine. Get ready for the absolute aha moment of this whole ecosystem. This is the core mechanic explaining exactly why the HYPE token keeps climbing and how it manages to decouple from the broader speculative market. It's a three-step loop. Step 1. Users trade perps, generating those massive platform fees we just talked about. Step 2. Over 97% of those trading fees are routed straight into what they call the assistance fund. And step 3. The kicker. That fund takes those real dollars and continuously buys HYPE tokens on the open market. The protocol is literally using its own massive exchange revenue to create this incredibly strong structural bid for its own token. And the result of that loop? $1.16 billion. That is the cumulative amount of buybacks executed since the launch. Over $1 billion. This proves that HYPE's price appreciation isn't just based on empty promises or Twitter hype or vaporware. It is driven by guaranteed daily buying pressure, completely fueled by the world's very real thirst for decentralized leverage trading.
Which brings us to part four, the 2026 bull case. Wall Street arrives.
So, if the buyback machine is the engine, late 2026 basically poured rocket fuel all over it, because traditional institutions suddenly woke up and took notice. First off, spot HYPE ETFs from heavyweights like Bitwise and 21 Shares launched to massive success in May 2026. These ETFs are pulling in tens of millions of dollars daily. There are actually days where they outpace the Bitcoin ETFs. Second, ecosystem expansion. They've launched on-chain prediction markets to directly rival platforms like Polymarket, targeting billions in real-world event betting. And finally, high-yield potential. Users can actually stake their hype to help secure the network and earn passive yields right on top of the token's price appreciation. But we have to be objective here. Part 5, the bear case risks. Navigating the threats.
It is super easy to get swept up in the excitement of all-time highs, but we have to cut through that and impartially analyze the very real hurdles this protocol faces. The first major threat is regulatory ambiguity. Global regulators are heavily scrutinizing DeFi derivatives. Because of this, Hyperliquid is largely unavailable to US users, and honestly, any further crackdown could hit their trading volumes hard. Second, supply unlocks. To prevent insiders from dumping at launch, contributor tokens were locked up. Well, now millions of those tokens are unlocking every single month. That billion-dollar buyback machine we love so much, it has to keep working overtime just to absorb this fresh supply. And finally, there's the tech itself. It's a bespoke Layer 1, meaning it's simply not as battle-tested as Ethereum. Plus, its closed-loop validator setup does introduce some real centralization risks that we can't ignore.
And that brings us to a really crucial concept: market overheating. By late May 2026, Hype had rallied 70% in just 10 days. Now, historical patterns across literally all financial markets tell us that this kind of parabolic price discovery usually means an asset is highly susceptible to a sudden, violent 20 to 30% correction. Because eventually, those early airdrop recipients and investors are going to decide it's time to take some profits off the table.
Let's wrap this all up. Part 6, the final verdict, a calculated move.
We've looked at the massive revenues, we've broken down the tokenomics, and we've weighed the regulatory hurdles. It really all boils down to one simple but crucial question. Is Hype a smart buy today at $64? To answer that, we have to acknowledge the absolute danger of buying into fresh all-time highs, no matter how amazing the underlying business actually is.
Where we look at this as a long-term hold, the reality is incredibly bullish. The unmatched fundamentals, the literal billions in derivatives revenue constantly buying up the token, and the aggressive institutional ETF accumulation, it all points to a massive powerhouse. But for short-term caution, entering at a $60 plus all-time high carries serious risk. Our objective analysis suggests the prudent strategy right now is patience. Wait for a broader market pullback to establish a position in that $40 to $50 support range. And while you're waiting, keep a very, very close eye on US regulatory actions.
Because unlike meme coins or ghost chains with absolutely zero actual users, Hype represents a calculated, high-reward asset. It is actively accruing value from one of the most profitable sectors in the entire digital economy. It's going to be absolutely fascinating to watch how this decentralized titan battles the traditional exchanges in the months and years to come. So, what do you think? Will heavy regulation ultimately stifle its growth, or are we looking at the undeniable future of global trading? Thanks for joining me on this explainer. Keep learning, and I'll catch you next time.
Thank you for watching this video. Please subscribe this channel.